Hi there. Every time I look at this business, it gets better and better. But the stock price keeps staying down. And do you know why? Well, as you can see, Baba stock went up quite a lot in recent months, over 50%, when the Chinese government announced the stimulus, but then it went down, back to the same level, almost, down over 20%. And if you look at the last 5 years, you can see that in the past 3 years, the stock price was around the same level, between $70 and $100. Up and down, up and down. So it has stayed flat for almost 3 years. And you may wonder why, when the revenue went up and also their earnings. And on top of that, they've done a lot of buybacks, as you can see here. A reduction in the number of shares from 2.5 billion to 2.3 billion. But you don't see that in the stock price. And I think that the stock price of Alibaba stays low because it's waiting for you to buy more shares. Of course, this doesn't mean you have to go all in. You also have to be aware of the risk. Now, as I said, if you look at their business, you'll see that they don't have only one business, but a basket of businesses. And what's important for you to understand about Alibaba is that they not only depend on China e-commerce, but also on their cloud computing, international e-commerce, Sineo, their logistics services, and also local services, plus all other businesses. So pay close attention to this. Look at the revenue for Taobao and Tmall. Now is about 98 billion renminbis. Right? And the other businesses are around 30 billion, 31, 24, 17, 5 and 52. Plus, as you can see, the most profitable businesses is Taobao and Tmall, with adjusted EBITDA of 44 billion. And the other businesses are trying to become profitable. Some of them have already done it, such as Cloud Intelligence Group and Sineo. Now, what you have to understand is that you see those losses for the other businesses or low earnings because they are investing in every business, in cloud, in international logistics network, local services, and also digital media. And as you can see, those businesses have a high growth rate. Just look at Cloud Intelligence Group. They've improved their growth rate from flat to 7%. Their e-commerce international keeps growing by 2-digit, over 20% a year or per quarter. Also Sineo and local services. And you have to understand that those businesses will continue to grow. And when they become the size of Taobao and Tmall, also their adjusted earnings or EBITDA will increase. This means that their final earnings, once they become fully developed, their earnings will get higher. And this is quite important because if you combine all their earnings, Alibaba can more than double their current earnings, their net earnings. But of course, this won't happen tomorrow or next year. It will happen in the long term, over the next 5 to 10 years. But once you understand this, you have to ask that question. What will Alibaba be in the next 10 years? Will the stock price be around $90 in the next 10 years? Just think about that. The stock price of Alibaba now is $90. And the next 10 years, what will it be? The same or even more than this. Just ask yourself. And look at their businesses. You see those growth rates? Quite great, amazing. Plus, on top of that, you see their share repurchases, their program, buybacks. A decline from 2.5 billion to 2.3, and still they have left 22 billion for other buybacks. And they announced in their earnings call they will take more debt to do those buybacks at the low prices. And guess what will happen to the stock price? Once they continue to do more buybacks, grow their businesses, and improve their earnings, in the long term will go up a lot, quite a lot. But as you can see, it doesn't happen overnight. For the last 3 years, the stock price is down 18%. And you have to understand this, because if you are not willing to wait, or you don't have the patience, then Alibaba is not for you. Sometimes, some people prefer to invest in something else, such as Bitcoin or Nvidia. They don't want to wait 3 years to put their money in this company and have no return. They prefer to go in Nvidia, Bitcoin, and then they might come back to Alibaba when their fundamentals improve. But that moment may be too late, because when they will announce better results and other great news will come, then the stock price will be up already. So that's why you have to take advantage before great things happen, good news come. That's the moment when nobody wants this business. For instance, in 2015 or back in 2022. So, my prediction, you only look at the revenue. And as you can see, the highest growth rate comes from Alibaba International e-commerce, 29%. And this segment will continue to grow. Imagine when this business, international, becomes the same size of Taobao and Tmall. The revenue to be about the same. If you look back in 2023, the revenue was about 24 billion, right? And Taobao and Tmall, 97 billion. But now, Alibaba International is getting higher, 31 billion. Next year, the revenue might be about 41 billion or 50 billion. So, you have to understand this, that Alibaba International e-commerce will become their second business, close to Taobao and Tmall. Now, you see those losses because they are investing in infrastructure, to invest in new markets, to attract more consumers, to build that mind share. But once they established their business, they will be able to monetize it at their full scale. And when that happens, their earnings will go up. You might see a growth rate over 50%. So this is their second pillar of Alibaba. Then the third one, which has improved in recent quarter and continues to grow, and might be the most important segment of Alibaba, is Cloud Intelligence Group. For now, you see a growth rate of around 7%, but be aware. Be aware of this growth rate, because they are switching from low margin projects to high quality revenue. High margins clients. And still they've been able to report a growth rate of about 7%, excluding Alibaba consolidated subsidiaries. And you can also see that adjusted EBITDA has increased by 89%. So this segment, Cloud Intelligence Group, may become the most important segment. The most important business of Alibaba. This may happen. Even though it requires a lot of investments at the beginning, you don't have to think about their infrastructure, but think about the services they can provide on top of that infrastructure on their cloud. That's the most important because those can deliver high margins. So the third pillar of Alibaba, which may be the most important. Then Sinio, which is in partnership with Alibaba International E-commerce, because this revenue also depends on Alibaba International E-commerce. As long as this segment grows, also Sinio will grow. And then local services group, a growth rate over 14%, and they're about to become profitable. And this is quite important, this segment, local services group, because it has the potential to deliver high margins, higher than Alibaba International E-commerce and Sinio, and also Taobao and Tmall. If you look at this segment, let me show you, local services, you can see that they have one service, AMAP, and they reported a record all-time high of over 300 million daily active users. Imagine, they have close to 30% of China population. And this is important because when you have a lot of users on only one platform or service, you can offer advertising services plus others. This is important because they can get high margins earnings only from one service like this, AMAP. Quite interesting, right? So they have a lot of ways to make money, and there is no doubt that they'll continue to grow. And look at this segment, international e-commerce. AliExpress, Trendyol, Lazada, and Alibaba.com. Those are the most important segments. And that high growth rate came from AliExpress, especially that new program Choice, AliExpress Choice Business. And more recently, what I observed is Trendyol, which keeps growing. So Alibaba is doing quite great. Even though the total revenue has increased by 5%, they are doing well. Now, if you look at their free cash flow, you can see a huge decline in their numbers. But, as I said, this is not a problem if you invest for the long term. And look at the revenue and how those businesses are growing. Be aware that now the other segments are investing in their infrastructure, build their mind share, and in the long term, they'll be able to increase their earnings. But as I said, if you are not willing to wait and you want to make money fast, then don't invest in Alibaba. You need patience because this comeback won't happen overnight, but in the long term. And of course, you also have to be aware of the risk. There is competition, other regulations from the Chinese government, and who knows what may happen. You also have to be aware of that risk. Don't invest all your money only in this company. Look for other investments better than Alibaba, with a small market cap and a nice PE ratio, or even better than that. Now, about the fair value of this company, I'll see you in the next video, which is available only for members. And if you have other questions, please let me know in the comments.